Rose, we need to see the HOA account transfers. Step back from your desk.
Do you know how many families rely on me? I built this company from nothing.
Rose Kasande Bailey managed the finances of more than 70 homeowners associations across Northern Virginia. For nearly 5 years, not one of those communities knew she was emptying their accounts. They're about to find out.
$1.1 million, Rose, out of 70 HOAs.
She would not talk her way out of this one. Within days, FBI forensic accountants would map every wire transfer, every falsified statement, every dollar Rose Kasande Bailey had shuffled between accounts belonging to more than 70 Virginia neighborhoods. $1.1 million, nearly 5 years. Homeowners in Reston, Leesburg, Ashburn, Falls Church, and Lorton, all quietly funding the cover-up for the one before them. The paper trail she had spent years falsifying was about to become the evidence used to convict her. The number you just heard, sit with that for a second. $1.1 million siphoned from over 70 communities, and every single homeowner thought their books were fine. Type it in the comments if that shocks you. Subscribe if this is your first time here. The full story is worse than the headline. Rose Kasande Bailey was born in 1964. She built her adult life in Northern Virginia and eventually settled in Warrenton, an old town of about 10,000 people at the base of the Bull Run Mountains, 45 miles from Washington. Neighbors described her as polite, well-dressed, unfailingly organized. She kept the kind of house where the mail was sorted the same day it arrived. Her professional life began in the small, unglamorous corner of real estate that most homeowners never think about. Property management, not the buying and selling that fills television screens, but the day-to-day accounting of communities. Dues collected, contractors paid, reserves tracked, meeting minutes typed. It is a field built almost entirely on trust, because the money involved is other people's money, held in accounts that most residents never look at directly. Bailey learned the trade in her 30s. She worked as a bookkeeper for a small management firm in Fairfax County, handling ledgers for a handful of townhouse associations. Colleagues from that period remembered her as reliable and meticulous with figures. Her performance reviews used phrases like detail-oriented and shows initiative on complex reconciliations. She studied for and passed the Virginia real estate licensing exam. She took accounting continuing education courses on her own time. In 2012, at the age of 48, she went out on her own. She filed the Articles of Organization for Rosewood Management and Consulting Services, LLC, with the Virginia State Corporation Commission. She rented a modest office suite on Germantown Road in Fairfax City, a low brick building shared with a dentist, an immigration attorney, and a tax preparer. She hired a small staff. She printed business cards on heavy cream stock. Her pitch to prospective clients was straightforward. She had spent 20 years doing this work for someone else. She understood what a 5-unit condo board needed and what a 200-home master-planned community needed. She would return calls. She would attend board meetings. She would keep the books clean. The neighborhood signed up. Slowly at first, then in a steady trickle, then in a wave. By 2018, Rosewood was managing dozens of associations. By March of 2023, the firm's portfolio had crossed 70. Townhome communities in Lorton, garden condo clusters in Falls Church, a large master association in Reston, mixed-use developments in Leesburg, a growing footprint in the Ashburn corridor. Every one of them a small, self-governing community. Every one of them handing Bailey the keys to its bank accounts. An HOA is a fragile institution. The board is volunteer. The residents are neighbors, not auditors. And the money that pays for the roof over the mailroom, the asphalt in the parking lot, the mulch on the common area, and the reserve for the next 50-year emergency arrives in monthly dues from every unit and sits in accounts most homeowners will never see. In Virginia, the standard arrangement works like this. Each association opens its own bank accounts, typically an operating account and a separate reserve account. The management company is engaged by contract and given signing authority so it can pay the landscaper, cut the check to the roofer, and wire the insurance premium. The board is supposed to approve budgets, receive monthly financial statements, and sign off on major expenditures. In Bailey's contracts, the rule was simple. She only had to alert an HOA board when an unbudgeted payment exceeded $1,000. Anything below that threshold moved on her signature alone. That single number, $1,000, was the entire fence between her and the accounts. The trust framework was built on paper. Every month, boards received a statement showing beginning balance, deposits, disbursements, and ending balance. Those statements were the only window most volunteer treasurers had into their own money. If the statement said the reserve fund held $200,000, the board believed the reserve fund held $200,000. Very few boards logged into the bank's website to check. Very few asked for raw statements from the bank directly. That was the manager's job. That was what they were paying for. Rosewood also maintained 2 of its own operating accounts. Bailey held signing authority across every one of them and simultaneous signing authority over the accounts of every HOA client. One person, 90-plus bank accounts, 70-plus communities. The only person in the system who could see all of it at once was Bailey herself. The first transfer was small. On May 22, 2018, Bailey moved funds from an HOA operating account into a Rosewood account to cover an expense the board had not approved. Reporting has never specified the exact figure of that first move. What is known is that she recorded the outbound wire, no one asked about it, and the following month, the statement she sent to that HOA showed a balance she had adjusted on paper to hide the difference. She had crossed the line. Nothing happened. Therefore, she crossed it again. The pattern that followed was patient and mechanical. When Rosewood needed to cover payroll, Bailey pulled from an HOA. When the office rent on Germantown Road came due, she pulled from an HOA. When a business credit card bill arrived, an HOA covered it. When a personal expense hit her radar, an HOA covered it. When she took on debt to acquire another property management firm, expanding Rosewood's book of business into new communities, she serviced the loan with money that belonged to the homeowners she had already promised to protect. She was funding her growth with her clients' savings. The dollar figures grew from hundreds to thousands to tens of thousands per month. Between May 2018 and February 2023, the transfers totaled approximately $1.1 million. That was not one theft. That was 57 months of thefts, layered on top of one another, month after month, at a cadence steady enough to look like ordinary business activity to anyone glancing at a Rosewood account statement. The concealment ran in parallel. When an HOA board requested an update on its accounts, Bailey did not forward the raw bank statement. She generated her own version. She would take the real statement, adjust the balance line, edit or delete the outbound transfers she had made to Rosewood, and produce a clean-looking document that showed the account exactly as the board expected to see it. She emailed those statements. She printed them for meetings. She attached them to quarterly reports. Every falsified statement carried the Rosewood letterhead. Every one of them landed in an inbox belonging to a volunteer treasurer who trusted her. The signs missed by outsiders were visible only in aggregate. A townhouse community in Lorton wondering why a particular repair was taking so long to schedule. A condo board in Falls Church noticing the reserve line had grown more slowly than expected. Small anomalies that never rose above the noise of ordinary community management. No one had the full picture. Only Bailey did. The unraveling began the way many white-collar unravelings begin. Not with a whistleblower, not with a sting, with a client deciding to leave. Sometime before the end of the scheme window, one of Rosewood's HOAs made a routine business decision. It wanted to switch to a new management company. The reasons were not scandalous. Boards change managers all the time. New contract, new terms, cleaner books. The departing association issued the standard request. It wanted its funds transferred to accounts under the control of its new manager. That request was a mortal threat. If Bailey handed over the account balances as they actually stood, the shortfall would be immediately visible. The departing HOA's operating account did not hold what her falsified statements said it held. It held what was left after 5 years of extractions. To close out that client cleanly, she needed the numbers on paper to match the numbers in the account. And the numbers in the account were short, so she did what she had already been doing, only larger. She reached into other HOAs. She transferred approximately $600,000 out of accounts belonging to communities that had no idea their reserves were being drained, and she deposited that money into the departing association's accounts to bring the balance up to the level her statements had always claimed. She then furnished the departing HOA with a final round of falsified bank statements to close out the file. The departing client left satisfied. The new management company received a balance that matched the paperwork. Nothing looked wrong, except $600,000 had just moved out of communities in Reston, Falls Church, Ashburn, Leesburg, and elsewhere, and the falsified statements those boards were still receiving had to hide that movement too. The hole had not been closed. It had been enlarged, spread thinner, and pushed into the neighborhoods that remained. She had accelerated the con to save it. Therefore, the ledger was now so distorted that a single audit request, a single treasurer who decided to log directly into the bank's portal, a single new board member who asked the wrong question would end everything. Stories like this don't get the attention they deserve. What Bailey did to 70 communities is the kind of quiet, patient theft that almost never makes national news, and it happens more often than most homeowners realize. If you want to see more accountability coverage, subscribe and hit the notification bell. We break down every detail these cases deserve. The specific tripwire has never been publicly detailed. What is on the record is that federal investigators from the FBI Washington Field Office's Criminal and Cyber Division opened a file on Rosewood Management and Consulting Services, and that once they began pulling records, the paper trail Bailey had spent 5 years falsifying became the evidence used to convict her. Wire fraud cases live and die on wire records. Every one of Bailey's transfers had generated one. The originating bank had a copy. The receiving bank had a copy. The Federal Reserve routing system had a copy. Nothing she had done on her office computer, on Rosewood letterhead, in an emailed PDF, could alter the record the banks themselves kept. Investigators subpoenaed the raw statements for every HOA client account and every Rosewood account. They lined them up next to the statements Bailey had provided her boards. The discrepancies were not subtle. Line items that appeared in the bank's records did not appear in Bailey's versions. Balances Bailey had reported did not match balances the bank had actually held. The falsifications were mechanical and repetitive, the same edits month after month, account after account. They mapped the flow of funds. Money left HOA operating accounts. It landed in Rosewood accounts. From there, it paid Rosewood rent, Rosewood payroll, Rosewood credit cards, Bailey's personal expenses, and the loan servicing on her firm acquisition. They interviewed HOA board members. They pulled the $600,000 transfer that had been used to make the departing association whole and traced the source accounts one by one. Each source was another victim. The scope kept growing. Over 70 associations. Over $1.1 million in transfers. Nearly 5 years of falsified statements sent to volunteer treasurers who had done nothing wrong except trust the woman they had hired to manage their books. Assistant U.S. Attorney Kenneth Simon Jr. was assigned to prosecute. The case was filed in the Eastern District of Virginia, Alexandria Division. U.S. Attorney Jessica Aber and David Geist of the FBI Washington Field Office would eventually announce the outcome. By the time federal agents sat across from Rose Kasande Bailey, they were not there to learn what she had done. They already knew. They were there to give her the opportunity to say it in her own words. The interview took place inside a modest conference room. 2 agents, a recorder, a stack of file folders. On the top folder, a printout of one of the $600,000 transfer confirmations. Agent: Mrs. Bailey, do you recognize this document? Bailey: It looks like a wire confirmation. Agent: It is a wire confirmation. The originating account belongs to an HOA in Reston. The receiving account belongs to another HOA that was in the process of leaving your firm. $600,000. Can you explain that transfer? Bailey did not answer immediately. Reporting on the interview does not preserve every pause, but people familiar with the proceedings described her as controlled. She did not raise her voice. She did not deny that the transfer had occurred. Bailey. There were accounting adjustments that needed to be made. Agent. Accounting adjustments approved by which board? She did not answer that question. The agents then produced a second folder, and a third, and a fourth. Each contained a comparison, a real bank statement placed side by side with a version Bailey had provided to her clients. Each one showed the same pattern of edits: balances raised, outbound wires removed, language cleaned up. Agent. Mrs. Bailey, we have this comparison for every account under Rosewood management for the last 5 years. Do you want to say anything before we continue? She asked for a lawyer. Those were the last words she spoke to federal investigators without counsel present. The interview ended. The evidence, already sufficient, continued to accumulate for months. On August 30th, 2024, in federal court in Alexandria, Virginia, Rose Kasande Bailey pleaded guilty to 1 count of wire fraud. The statute under which she was charged carries a maximum possible sentence of 20 years in prison. The plea agreement stipulated the factual basis for the conviction: the 5-year scheme, the $1.1 million in unauthorized transfers, the $600,000 cover, the falsified statements, the 70 affected communities. Sentencing was set for November 26, 2024, before U.S. District Judge Leonie M. Brinkema. The pre-sentencing filings from the two sides were unusually far apart. Federal prosecutors argued for a 3-year sentence. Their memorandum described the conduct as a sustained breach of trust, emphasized the scale of the victim pool, and noted that the falsifications were not a moment of panic, but a mechanical, repeated act carried out over nearly 5 years. The federal public defender urged the court to impose probation instead of incarceration, citing Bailey's age, 60 at sentencing, her lack of prior record, and her cooperation with the plea. At the sentencing hearing, victim impact statements were read. Representatives of the Old Town Court community appeared. Representatives of Hearthside at Flynn's Crossing in Ashburn appeared. A Lorton community was represented as well. The statements described the practical damage: reserves that had to be rebuilt, dues that had to be raised, projects that had to be delayed while boards figured out how deep the hole actually was, and the harder to quantify loss of a community's confidence in the very idea of hiring someone to hold its money. Judge Brinkema imposed a sentence of 2 years in federal prison. It was lighter than the 3 years prosecutors had sought, and heavier than the probation the defense had requested. Specific figures for restitution and supervised release length were not detailed in the available reporting. Rose Kasande Bailey walked out of the courthouse a convicted federal felon. Rosewood Management and Consulting Services no longer manages a single property. The 70 communities she once served are now under new management, still repairing the accounting damage she left behind, still explaining to homeowners why the reserve line looks different than it did on the statements they used to receive. One signature, too many accounts. Almost 5 years before anyone thought to look. This case was quiet, but the case on the right-hand side is anything but. Click it now.